Hello traders out there in Traderland. My name is D7 here at Grok Trade, and this is the weekend edition. Good through March 31st, 2019. We round out the first quarter of 2019. Start off Friday, the markets ended the day bullish after a choppy week. Crude oil up 1.2%. Silver and gold up, silver higher than gold. VIX dropping 5% on Friday, down at 13.7. Bitcoin at almost 4,100. Okay, before I get started, I need to share something of great importance with everybody. I have been doing trading videos since 2004. 2004. Doing these daily trading videos. Far as I know, nobody had been doing daily trading videos before me. So I arguably am the pioneer of doing these trading videos. Long time. I've been with Rich Dad Poor Dad, Wealth Intelligence Academy, Star Trader, Option Success. I helped many brands do amazing things. I have been an institutional trader, moving big money. I own an education company because my website went #1 on Google, and it allowed me to teach others. And I've always said I will only do this one thing. I will only teach people through mentoring because that's what helped me. That's all. Well, unfortunately, and I'm sad to say, that this video is my last trading video that I'm going to do. Hurts my heart. You guys have been with me forever. And this is something that I've always enjoyed. The reason it's my last video is, in large part, has to do with the fact of my community and the ability every once in a while that I have to grab a hold of you guys individually and pull on your leg. April Fools. Don't hate me. Don't hate me. April Fools, April 1st. I'm just that guy, okay? Let's get into the markets. Let's go. Leave me a comment. Listen, subscribe if you're not a subscriber, and hit the little bell. You want to subscribe. Here's the deal. The picture I'm getting ready to paint for you guys is I'm going to leave it up to you on your own analysis based off of what I'm exposing to you. Fair enough? Let's do this. S&P 500, we're looking at the spider. It's the ETF on it. It's very good because it gives us volume also, okay? Here's the deal. We have the S&P going higher. We got a rising wedge. We broke the blue line. We come up, and now we have these two red lines, which also gets wedgy. See this? Two lines starting to pinch together. The reason I'm not putting a buy signal on this right here, because this could easily pop up here. Monday, Tuesday could easily be bullish. That we could definitely do that. So I should put a buy signal here. The reason I'm not has to do with everything I'm getting ready to share with you. We have a bearish divergence on the MACD. Do you see this? Bearish divergence. That's bad news. It's telling us we're ready to break down. At least that's what it's alerting us to, okay? If we go over here to the weekly, this is the weekly on, let's make sure we're on the spider. So we have a buy on it, but look how extended we are. We're very, very extended. We're due for a down leg. We're due for it, and that could happen like relatively quickly. If you look here at the MACD, do you see this? We're just kind of coming down. I don't know. that's not so bad. But let me share with you the monthly, and I want us to pay attention to this. Monthly, we've been on this just huge run. Guys, this has been a run since 2009, okay? 2009, we're at 2019. This is a 10-year bull market run. 10 years. History. This is 95 to 2000. That's 5 years, a 3-year pullback, okay? This is each candlestick is 1 month. So I'm going quickly here, but 5-year run up, 5-year run up, 3-year pullback, 3-year pullback. Here we got a 5-year run up right here, 5-year run up, and we pulled back. So we go from 2000 here, or 2007 down here to 2009. So we're talking a 2-year drop here, and then we should have another 5-year run. We've had 2 5-year bull runs before we had retractions. Here we get a 5-year run and then another 5-year run. We are extended by 2 times. 2 times. The pullback that we should get here should be significant. If you look here, we have a bearish divergence on the monthly chart on the S&P 500. Okay, there's the bearish divergence on the MACD centered oscillator. We're going up here, we're going down there. Bad news, bad news. We drop. We bounce off this support line like it was supposed to. We up, but we have a slowdown on trajectory. And let me show that to you on a micro level. I want you to follow me here. I'm going to go from this point to the highest point. Now I'm going to go from this point to the highest point. We are sloping. We are slowing down. Trajectory has slowed. And on top of that, we get a hanging man reversal pattern right here. Hanging man. Well, zooming back out just a bit, look at this. We have a shoulder, head, and shoulder. This is a perfect place for a shoulder to be put in and to have a significant drop and then a significant pullback. Guys, technically speaking, as far as the charts are concerned, this is a picture perfect scenario for the markets to have a sizable drop. And it could be the start of a major correction. Now, let me go into the big picture here. Now, this goes back to 2009, okay? We're 2009. We go up to 2019, okay? 2009, 2019. This is the makings of a perfect trend reversal pattern. Not just a candlestick reversal pattern. We're talking a trend reversal pattern. These are monsters. These are double tops, double bottoms, triple tops, triple bottoms. These are rising wedges, falling wedges. These are head and shoulders, inverse head and shoulders. That's what we're talking about here, where trends make a change. That's what we're seeing here. Shoulder, head, and this could easily be a shoulder. The neckline on this would be here to here. For the technical books to say this to be a fully trend reversal, a head and shoulder trend reversal, and it would have to drop down, break this trend line, and break the neckline. That's called the neckline right here. That's the neckline. I'm telling you, if it breaks this trend line, stick a fork in it, because if it does that, I'm going to do a minor trend line here for my 301 mentor students, the Grok grads. Those guys, look at this line particular on making judgment calls, okay? There's the minor trend line, which you guys have drawn in yourself, but that is a key level. But the big one is this main trend line. This is the blue one here. This is the one that we're watching. Now, I'm not saying, I want to be careful here, guys. I'm not saying that we are going to crash, because I don't know. I don't have a crystal ball. I don't know what's going to happen. What I do is I look at the margins. I look at the metrics. I look at the probabilities based off of the technicals only, and I stack a confluence of technical indications to build a thesis, a hypothesis of what may happen next, at least to what degree, okay? Is that fair? Are you with me? Is that fair? So a lot of people think, when I make a call and they're like, oh, you were wrong. Yeah, man, I'm going to be wrong 50% of the time. That's just the name of the game. And I mean, technically, I do better than 50%, but it's 50-50 on being right or wrong. But if you are at 55%, if you're at 60% on the right side, especially if you have the reward to risk ratio in your favor, that's where the money is. That's the money in the markets. That's what's life changing. Okay, now there's the S&P daily or monthly chart. If you go to the diamonds, again, shoulder, head, and shoulder, a hanging man. It's even a red candlestick. This is ready to drop. This is ready to drop. I should put a sell signal on it right now. I'm just not yet. I'll wait for the confirmation. The Qs are looking good to me. I have no problem with the Qs going higher, but it did break this trend line, and I think it might go and give us a double top. And there would be your double top, M for murder. If it gets up here and then drops, there it is. Small caps had a major sell-off, a bounce, and look at this reversal pattern. That's a bearish thrusting pattern right here. Expect that to drop. Financials are at resistance. So we're at resistance, we dropped, we popped up, and we're dropping again. We have a bearish engulfing at a resistance point and a 20-month moving average. Guys, perfect area to get us have a sell-off. US dollar, I just put this on for the start of this next week, right? Or this next month. And we're at resistance, though, that we could drop. It needs to pass through this. It has to break that. Crude oil monthly chart, we're going up, up, up. But look at this, guys. That looks like a bear pullback. Just look. If you don't know what a bear pullback is, a pullback sell, guys, this is a perfect area to be looking to sell this on a monthly chart on a bigger time frame. If it does that, woe to oil. Oil could take a nosedive. Silver, got to sell on it, and it's diving. See, this is going lower. Gold, I got to sell on the monthly, and it's going lower. VIX, I got to sell on the VIX. It's going lower, but I think this is getting ready to pop up, guys. I think it's going to go higher. Bitcoin, we got to buy on it, and it's getting ready to pop higher. It looks like it's getting ready, like it's putting in a bottom. Okay, now if I go over here to the quickly, I'm just going to do this very, very quickly. The diamonds. Let's go to the diamonds. The daily chart. This is the daily chart on the diamonds. We're right at resistance. We popped up. That's why I'm not putting a buy on it. We're right at resistance. I could see a big sell-off taking place. I could see that happening. NASDAQ. The NASDAQ, I got to sell on it. Drop, drop, drop. It popped up here, but it's hung up on this moving average. Like it could easily break down. The small caps. This is the Russell's 2000. We had a buy on it, up, 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 but we're at resistance. I mean, man, I got to put a sell on that. Am I going to put a sell on this one? I already have a sell on that one. I already have a sell on this one. Diamonds, I already have a sell on it. I'm not putting a buy, so I'm good with that. Russell's 2000, I put a sell on it. Let's go to, this is the financial. So I'm going to put a sell on this, the financials. This is a great bear pullback. Down, 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 a little bear pullback. You sell it short now. This is trouble city for the markets. Guys, look at this. I want you to understand that financials act as the fundamental foundation of the overall markets. The markets are only strong as the financials there to support it, okay? So we're up, 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 happy, 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 pull back, happy, happy, up. The problem is we did not hit this upper trend line. We were happy at this trend line, happy, 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 happy. We missed it. That's unhappy. We drop, we break a major trend line, way unhappy, 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 unhappy. Okay, let's take a breather. Let's bounce up a little bit. And I want to see little volume. And sure enough, we're below the average. And now here's the opportunity to sell. I think we're going to go down. If the financials sell off on the daily chart, we're start to go down. That could be the catalyst for the weekly and could be the catalyst for the monthly to also sell off. If you look here at the US dollar, let's go there. I mean, look at this. The US dollar, we're at resistance. Every time we get there, I'm going to put a sell on it. And if you go here to crude oil, we got a buy. We're up. I'll stay with the buy at this moment. But this is a rising wedge. This is in trouble, trouble, trouble. Silver, I got to sell on it. Oh, and we just, somebody, I don't know, somebody in the comments at some point on one of my videos goes, there's no way he's calling gold and silver this much. Guys, if I recall right, I don't know that let me see, the 21st was the 21st of March. That's middle anyway. So anyway, the or 22nd. You guys, these are my calls. They're my calls. And if you don't believe my calls, that's fine. Just only pay attention to the ones that you see me put on and then measure those. I think that is completely fair enough. Gold. Got to sell on it because I put a sell on it, it popped up right against me immediately, and then it finally sold off. VIX. Got to sell on it. It's dropping. I'm good with that. Bitcoin. What do I have on this? I have a buy way back there. So that's fine. There's the buy on that. If I go here, okay, to the weeklies. If I go here to the weeklies. And I'm using TradingView. Down in the comments, you can see TradingView. Click on that link, and you can get TradingView. Here, we're just up on the spider. This is the spider weekly. It's extended. It's ready to pull back. Diamonds here. We're up, bulling. This is a bullish pennant. The weekly tells me it could get bullish. NASDAQ could put a sell on it, but look what it did this week. It popped up. I'm going to stay right now with my sell. Oh, but that's going against me. I have a sell on my small caps, but it looks like it's wanting to get bullish. So dailies are bearish, monthlies are bearish, but the weeklies are telling us expect a bounce. This is financials. I'll stay with my sell. US dollar pops, so I'm going to go ahead and put a buy on the US dollar weekly. Crude oil, I had a sell on it, and it popped up, but that's a tweezer top. That could easily get bearish. Silver, I got a sell on it. I'm good with the sell. Gold, I have a buy. Oh, I had a buy, and now I've got to put a sell on this dude. Where are my arrows? Right there. That is their VIX. I got a buy on it, but it dropped. I'll stay with that. Bitcoin, I got a buy on it. It's going up. Okay, there it is. Did I give you guys this is not a long time. Did I just freak you out at the beginning? I didn't mean to. I didn't mean to. Please, nothing but love for you guys. I'm working on my thespian skills, as you can see. And for those who've been with me for many, many years, you'll know I've done that a couple of times. So anyway, I do want to share something with you. I posed a question to everybody, and this could be a line of discussion for you all. Here's the deal. I said if you had a roulette table, black and red, you would lose your dollar if you bet $1, but black would pay you $1.25 or $1.50. It'd pay you a little more than $1. Would you gamble? Some of you said yes, some of you said no. And here's the concept I want you to understand and believe to your core. If it is truly 50-50, whatever you bet, if you lose, you will lose. Okay, it's gone. But whatever you buy, you make not that amount, but you make that amount plus a percent, let's say 25% on top of it. If that's the case, that is your new ATM. That is a money-making machine that you can't put enough money into. Because every time you play, every time you win, you're going to be making more than what you're losing, and it's 50-50. So at the end of the day, at the end of the week, at the end of the month, at the end of the year, depending on how much you put on the line to gamble or risk, I would say risk, not gamble, you will be up a significant amount of money. That's what you have to understand in trading. That's the purpose of understanding and stacking all the odds in your favor. Not trading what you think, trading what you see. If you see opportunity, you see the odds stacking in your favor, and you know that your reward is going to be more than your calculated risk, that's trading. That's where you make your money. Most of us in the business world, we have this fear to first envision and see opportunity, and then this fear of acting on it. It's almost inverse in trading. And they do see the opportunity to make money, but they have no fear trading because of false beliefs in their methodology. They read something, an article, a free video, free webinar, free whatever, excited them. They feel like that they have what they need to trade. It's a false belief. It increases your odds no more than your odds being increased going into a casino. Most individuals, they're gamblers in the market. Gamblers. Don't be a gambler. If you're a gambler, 89% of all gamblers, 89, won't just lose their money, but they'll lose 100% of their capital. It's just the same odds in the casino. 11% will capture money. 11%. What separates the 11% from the 89? I can tell you, it's a number of things. One, they're disciplined. Two, they're emotionally cold-blooded in the markets. They have those two things locked in. But those by themselves don't help you unless you have a rock-solid trading plan in place. Rock solid. That trading plan has to be comprised, developed, and put together by trading rules that stack the odds in your favor. These trading rules aren't just ideas and theories. They're actually rules been set in that have been tested and highly tested, vetted to prove that it stacks odds in your favor. Those are now the fabric pieces, the building blocks of your trading plan. And when you're trading and you're saying, because of the odd probabilities, I won't be 50-50 ever again. I will always trade higher than 50%, meaning that I'm not a monkey throwing darts. A monkey throwing darts could do 50-50, but we're going to be shooting for 60%. 60% win ratio. 60% where you're winning more than you're losing. But that's not good enough unless your reward to risk ratio is in place. Your reward to risk ratio has to be something, your reward has to be greater than your risk. You have to identify, set in your risk in place where it is a defined line in the sand where this is risk equals X. Your reward has to be X times X plus some higher number. You incorporate all that together, that's the magic of trading. Now, I said all that to say this. How do you learn all that? It's only by guidance and direction, hand-holding. It's only by the nurturing of somebody that's already in the markets. It's only by having a connection with somebody who can answer your questions at your speed. Mentoring. That's why we mentor. That's why we do it. That's why you should be in our 3-day class, April. You should join us. Find us, groktrade.com. Hope that was a help to you guys. Sorry for the scare. Catch you all later. We'll see you. Bye.